Good morning, degenerates, and welcome to another episode of Boring Crypto IO, a place where I read you the boring crypto news every morning, Monday through Friday, so you don't have to. My name is Not Important, and I'm your host. Let's go. Scam alert, MetaMask warns crypto users about address poisoning. Gary Gensler finds new audience for his crypto skepticism. Weird, the US Army. This dude is a waste of space. And CPI numbers. Guys, not a lot going on today. We're going to keep it short and sweet. I didn't find anything too crazy in the news, just those two articles, and we'll talk briefly about the CPI numbers and what that means for the market. Bitcoin. We had a pump, y'all. All right. Yesterday evening, Bitcoin took off. We blew past that $18,000 level that we were talking about and keeping an eye on. We did hit it, pulled back quite a bit. Not quite a bit. We pulled back a little bit. And then right as this new candle started to form, we blew out last night. And we pushed past 18. And if you look at this on the 4 hour, yeah, we blew right past it. We hit this 18.4, which is another level that I've been looking at. And we retraced. And now we're kind of bouncing around in between the 18,000 and let's call it 18.2, 18.230, whatever. So with that being said, I gotta be honest. I mean, this looks like a beautiful double bottom pattern. But like I showed you guys yesterday, this is something we have been doing. Double bottom pattern and then tank. Double bottom with actually a big run up and then a tank. So this is something we've been doing for a while, guys. So again, I hate to sound like the negative Nancy bear, but just be safe. Trade with caution. Like I said, we've got the CPI numbers coming out today, which is always a cause of volatility in the market. Just pay attention to what you're doing. Don't get too degenerate-like. Don't get too crazy. But here's what I'm looking at. All right, again, not financial advice. Trade at your own risk. Crypto is very volatile, and you could lose everything. I am not a financial advisor. Anyway, this is a trend line that we keep bumping, and as soon as we touch it, we come down. So I am curious to see that if we can get past this 18.4 level, if we touch this trend line, is this even a real trend line? Are we going to blow past this, or is this something that's going to reject us again, and then we're going to come back down to potentially this 16.4 again, which is what we've been doing. If we break past that 16.4, I mean, last resort catch is 15.758, 15.7560, whatever, or 760, excuse me. But this is a big one that a lot of people are looking for, is around the $14,000 level if we have a big see you later buy. So, like I said, I'm watching this 18.4. I'm watching this trend line. If we get past this trend line, I'm watching the $19,000 level. And then we go back into this mess over here to see what kind of strength resistance levels we're going to have. All right, guys. So just keep an eye on it, per usual, especially with CPI numbers coming out. Tight stop losses. Trade conservatively. Be smart. Don't lose your money. Not financial advice. Moving on. Ethereum. All right. Ethereum definitely ran up too. We're creating what looks to be a double bottom pattern. If you kind of kick this one out, it's going to be a fake out. Same thing over here, but this is what we've been looking at, guys. These double bottom patterns with these big run ups and then come crashing back down. Same here. Double bottom. Big run up, and then eventually we lost market. But this could be the FTX stuff. I mean, there's all sorts of variables at play. But let's just, and I'm digressing because, I mean, they're charts, man. There's all sorts of information to try and dissect. But let's focus on what's in front of us right now, right? So we blew past the 1340 level, and I expected to see some kind of resistance around here at this 1366, because we hit it here, we got rejected. We hit it here, came down, but then we took off. But no, we blew past all this stuff. But what we did hit, and I didn't even have this level marked until this morning, around this 1416 level, basically 1400. We'll just say 1400. Now here's what's interesting about 1400. I went back and looked why this might be a resistance level, and I'm on the daily, and I'm not seeing anything. I'm not seeing on a daily perspective. I'm all these swings, we rolled right through it, rolled right through it. Either went up past it or on a decline, blew right below it. But then I kept scrolling, and what I started to notice is that this is old resistance where we're at literally right now at this 1398. Again, we'll just call it 1400, right? This was back in January of 2021 where we were hitting this before we broke out of it and went into our big bull run back in 2021. Why is this significant? Well, let's scroll back even further. This is the very top, very, very top of the bull market of back in January of 2018. This is literally the very top of where Ethereum went back in 2018. So this is a significant level in my opinion, and which is interesting because the only times it really showed big significance was at the very top of the bull run in 2018, and when we finally broke out of it at the start of the major, I guess you could call it the parabolic phase of the bull in 2021. But it was clearly strong resistance back at these 2 points. When we retraced going into this bear market, whatever you want to call it, it didn't show any significance. Maybe a little bit right here and right here as support, but now it's resistance again. So here's what I'm talking about. If we break this, come out, come down, retest, and turn this resistance into support, very bullish in my opinion. But again, it is significant resistance if you look to the to 2017-2018 bull run. Significant resistance. It's the very top of the market back in 2017-18, and then before we kicked off this last bull run in 2021, it was strong resistance back then. So something to think about, a little food for thought. Keep an eye on the levels, but if we break out, retest, turn into strength, that's bullish to me, guys. So I will keep you guys updated. It just, again, something to think about. And this is here, before we blow out away from the charts, I'm going to show you what a lot of people are talking about too. It's similar to the trend line, resistance trend line that I drew on Bitcoin. But a lot of people are talking about this right here. Is this downtrend? And they're bullish because of this. Touch, come down, kind of that. I guess you'd call it a swing high to close enough to it. Touch, we got rejected. Now again, we touched, looked like we were going to retrace, and now we're blowing past it, but we're hitting resistance here at that $14,000 level. So again, just things to keep an eye on, guys. Per usual, tight stop losses, trade conservatively, not financial advice. Again, especially with CPIs coming out. All right, it's enough for charts, guys. I'm rambling. Let's go into the short amount of news that we have today, or small amount, I should say. Scam alert. MetaMask warns crypto users about address poisoning. I had never heard about this. This is actually kind of intriguing to me, so I figured I'd read today with there not being a lot of news out there. So the scammers will use wallet addresses generated from vanity address generators and match the first and last characters of the victim's wallet address. A new crypto wallet address scam that tries to take advantage of users' carelessness has been on the rise, according to the MetaMask team. In an announcement, digital wallet provider MetaMask warned users of an address poisoning scam where attackers, quote-unquote, poison transaction histories by sending users tokens worth $0 to their wallets. The scammers will use the wallet address generated from vanity address generators and match the first and last characters of their victim's wallet address. This gets unsuspecting users to send their funds to the wrong copycat address. MetaMask in a tweet, a new scam called address poisoning is on the rise. Here's how it works. After you send a normal transaction, the scammer sends a $0 token transaction, poisoning the transaction history. Now, while the attempt would not give the hackers access to users' wallet, people who may have gotten into the habit of copying their wallet address from the transaction history before sending the digital asset balances could potentially send their funds to a copycat address or to copycat addresses. Because of this, wallet provider warned users to always be careful and double check their transactions before sending their balances. The firm highlighted that it would be best to check every single character of the wallet address to ensure the funds are sent to the correct wallet. Apart from this, the firm recommended that users stop copying wallet addresses from their transaction histories. There's your answer to solve this problem right here. And use their address book when sending digital assets. Now, I've never done this. I've never copied from transaction history, so that was intriguing to me. I always just copy from where the address is being provided. But if you're doing this, stop, or just at least double check all the characters in the address are correct. It's just look. These are the most ways that people get scammed in crypto are all different variations of quote unquote phishing scams. They're not necessarily hacking people's wallets and whatnot. They prey on negligence and laziness, right? So we get it. Transferring crypto to wallets, to different exchanges, copying giant wallet addresses, etc., it's cumbersome. It gets annoying. We don't like it. So we try and, we're human. We try and find more efficient ways, quicker ways to do that, to send crypto. And copying addresses that I guess from transaction history is the way that people have been doing it. Don't do it. Look, guys, just keep an eye, double check every transaction. This is your money. Be smart about it. Don't get lazy about it, because these people want your crypto. They want your money. So something to think about. I just thought it'd be interesting to read, with today being kind of more than usually boring in the crypto space. Moving on, Gary Gensler, this POS. All right, Gary Gensler finds new audience for his crypto skepticism. U.S. Army. The U.S. Security and Exchange Commission chair called crypto the Wild West and urged troops not to get caught up in the FOMO. I love when guys like this, these suits, these desk people, yeah, they talk to people in our military like they're children, just our grunts, right, out there doing the dirty work for us. I don't know, man. I clearly, obviously, guys, I've got a really sour taste in my mouth for people at the SEC, especially this guy. Anyway, moving on. The United States Securities and Exchange Commission Chair Gary Gensler has found a new audience for his crypto skeptical pep talks. The United States Army. On January 11th, the United States Army hosted its first Twitter Spaces event in 2023, with Gensler and SEC Commissioner Caroline Crenshaw joining the discussion to provide financial advice on how and where U.S. soldiers should invest their money. Thanks, Mom and Dad. Sergeant Lawrence Holmes noted there are soldiers that look for those alternative investments such as crypto assets, asking the pair what risks there were to crypto investing. It's quote-unquote the Wild West, Gary Gensler answered, adding that most of these 10,000 to 50,000 tokens will fail. History tells us there's not much room for microcurrencies, meaning this guy talks like he's that, like, I don't know if you guys have ever seen that Steve Buscemi gif where he walks into like a high school with a hat on backwards and a skateboard, and he says, "Hello, fellow youth." This dude like tries to act cool, and he's the most like uncool old guy. It's the cringiest thing ever. Sorry guys, I'm giving way too much of my opinion on this, but this dude's garbage. Anyways, like I said, he urged soldiers not to get caught up in the FOMO, the fear of missing out, saying cryptocurrencies are highly speculative and non-compliant. Most are not complying with securities laws, but they should be. Oh, here we go. Gary further advised that if the GIs see a yield that's too good to be true, it probably is, regardless of whether it's crypto-based or not. And I'll be honest, okay, that's fair advice. Guys, I personally never got into any of the staking and yield stuff that looks, you know, all these like 1200% APYs and shit like that were out there during the bull market. I don't know. And again, call me a skeptic, call me whatever. I just always look at that stuff like, dude, that seems shady. It just didn't make sense. I never got into it. So, hey, I'll give him that. That's fair advice. Crenshaw added to Gensler's comments saying cryptocurrencies are noted for their scams and stated that it couldn't have been their technology. No cryptocurrency is noted for its technology. The claim to be transparent. What's on the blockchain is transparent, but the rest of what's there is not transparent. And I think there have been some examples of that recently. She said those considering a crypto investment should give careful consideration to the percentage of their portfolio they devote to digital assets. As for the SEC's advice on where U.S. Army personnel should be placing their dollars, Crenshaw told troops to invest as much as possible in thrift savings plans, a government-sponsored retirement plan for federal employees and service members. And I'm not too versed on what these TSPs are. I did a little bit of reading. Basically, TSPs are, from what I could find, like a 401k plan for federal employees. And personally, I'm not a fan of 401ks either, but it's just intriguing. You have these people that work for the SEC that are quote unquote supposed to protect the retail investor from, you know, they're the shadiest people out there in my opinion. And yes, if that invest as much money as possible in this federal plan that gives us your money and lets us play with it, do whatever we want with it, while we give you a really shitty yield on the back end. Whatever, man. If I sound like I'm bitter, it's because I am. I don't like any of these people. But guys, last but not least, again, I'm not going to go into too much detail on this, but just to be aware, if you don't already know, the CPI, Consumer Price Index numbers, are going to come out today. This usually shows or gives room for high volatility in the crypto space, especially right when they're getting ready to announce. If you are trading, just be smart. Here's what we got going on. December last forecast. You get all the people that will bet on this and make moves in the market based on what they're forecasting the numbers to be, and then based on what they actually come out to be. So the forecast was 7.3%, the previous was 7.7%, actual was 7.1%. So what do we have going on today? We've got a forecast of 6.5%. So we will see what the actual will be. I am going to try and get this video out before these come out, so you guys are aware of what's going on. Outside of that, guys, not a lot going on. I rambled a little bit too much about the charts. I'm sorry. Again, not a trading channel, but just helping you guys be aware of what's going on and what I see. But outside of that, I appreciate you guys stopping by and watching these videos today. If this helps you, if you enjoy the content that I provide on this channel, please, by all means, subscribe to the channel, turn on that bell for notifications, guys, and like the videos. Outside of that, I will see you guys tomorrow. I am out of here.